Friday, July 25th, 2025, Maneco 64, home of alternative economics and contrarian views. Good morning, Clive.
Good morning, Mario. Good morning, all your viewers.
Yeah, good morning to all of you. And today we're going to start with Japan, Clive, because I spoke on Monday this week, and I did a video entitled Political Earthquake in Japan Could Trigger a Global Bond Crisis. And of course, Japan was closed on Monday, and on Tuesday, the markets there were quite stable. I think the BOJ injected a lot of liquidity to keep things humming along. But in the last few days, especially Wednesday and Thursday, the long-term JGB yields really spiked. They made new all-time highs. And yes, the coalition that leads Japan, LDC coalition with other parties, they've lost control. They've lost a majority in the upper house, and they don't have a majority in the lower house as well. And I think it's a risk a lot of people are overlooking, especially in the US and in Europe. So just wanted to get your opinion on Japan.
Well, I think the real problem here is Japan has got the highest debt to GDP ratio in the world, at least in the Western world. It's something like, I haven't got the figure in my head, but it's something like 260%. You maybe know more up-to-date figure. But the real problem here is the interest rates on the Japanese JGB bonds have been rising very sharply. And I'm looking at the 30-year interest rate on the 30-year JGB, Japanese government bond. It's just gone over 3%. It's 3.06, I see on my screen at the moment. And we mustn't forget that that rate was down at 0.1% or something like that. I'm just looking here. The low point was 0.13%, something like that. So it's basically now 25 times what it was. And that means that as all this debt matures, the money that the government borrowed in 2019, for example, which will mature over the next decade or so, as it matures, they're going to have to refinance themselves at an interest rate which is many, many multiples of what it was. And with such a high level of debt relative to the economy, that rapidly rising interest rate is going to really damage their budget. They're going to go their deficit is going to get much larger and larger and very quickly due to the interest rate effect.
Yeah, no, I agree. And I did this chart yesterday here, Clive. It's the 10-year JGB yield. And I took it all the way back to the 80s. And you can see here that it was around 8.5% in the early 1990 or so. And we had the huge bull market in bond prices. These are the yields dropping. And you can see that the debt to GDP as well, Clive, went from around, below 70% or so, all the way now to like 235%. And do you notice that like the lower interest rates went, the bigger the debt grew, because it's always easy to indebt yourself when the borrowing costs keep going lower. But now, to me, Clive, this is a complete reversal. And it's not only happening in Japan, it's happening in the US, in the UK, in Europe. All these bond markets could be a time bomb, in my opinion. And eventually, you might not even have these government bond markets that we have right now, JGB, Treasuries, gilts, and the Eurozone bonds. They could be gone in 2 or 3 years if rates keep going higher, and we could have a brand new system. I think I'm not sure that we can keep this bond market and the economy and the markets going if we have like a 20 or 30-year bear market in bonds. So I think this is really serious, and Japan, I think, is the eye of the hurricane, so to speak.
Yeah, yeah. I mean, the real problem everywhere in the world is when interest rates are very low, there's a tendency to increase your borrowing because you say, it's not costing me much, I can afford this. And then suddenly interest rates go up and it's costing you a lot. And you've got your maturing debt also having to be renewed at that higher rate. I mean, if I was taking advantage of the very low interest rates, and we're here in Switzerland, by the way, which has pretty low interest rates. So for many years on my mortgage, I was borrowing very, very short term at interest rates well below 1%. That's your mortgage rate. And interest rates are still below 1% if you borrow money short term, what is called the Saron rate here. But what I've been doing over the last 2 or 3 years, I've been saying to my banker, I want to take another slice and lock it in for 10 years. And the banker's saying, well, Clive, it doesn't make any sense. You can borrow money on your mortgage below 1%. Now, if you want to lock it in, it's going to cost you 1.5 or 1 3/4. I said, you know what? I'd rather pay 1.5 knowing that I've locked it in for a decade than 3/4% where you might change the rate on me tomorrow.
Yeah,
And
I agree
that's the that's
100%.
the that's the danger. People who've got borrowings now, if those, and we're not seeing rising rates here in Switzerland, but elsewhere in the world, we're seeing rising rates. If those rates are starting to look unmanageable, people should be thinking about locking in the rates before they go higher.
Yeah, I think it's great to I think it's a no-brainer what you did, fix it for 10 years at 1.5 instead of borrowing at one, let's say short term. Clive, before we continue, with the serious stuff, just wanted to let the viewers know, yes, I've got my Get Stacked hat from the Rudy Collection store. Uh, and I just wanted to tell the viewers there's some, excuse me, there's some new products that have come out. Uh, I hear from Karen, who runs the store, that these End of Fed mugs are really popular. And so she's designed some End of Fed shirts, t-shirts, and she's also designed some at Monaco 64 Get Stacked like golf shirts. I'm sure a lot of you have noticed that I like wearing my golf shirts or sports shirts. So there's also, of course, let me go back here. If you buy something before, let's see, where is it? Let's go here. Yeah, if you buy something, place any order before July 31st, you're gonna be in the raffle to get a precious metals silver coin, with a value of approximately $50. So just wanted to let people know that. Anyways, Clive, back to Japan. And I was reading this morning, Clive, because this situation in Japan is getting very serious because we've known Japan in the last 30 years, despite their economic problems, to be a relatively stable country politically. But I was reading this morning on Bloomberg. Rise of right-wing populism threatens Japan's haven status. So I thought this was really interesting. It looks like this kind of movement is not just happening maybe in the US and Europe, but also in Japan. And I was surprised by that. And one of the major reasons they talk about why people are getting pretty upset in Japan and voting more populist is because of this inflation or CPI in Japan. I remember, Clive, and you probably do as well, that in the last 25 years, the worry for Japan and people like Ben Bernanke is that they're going to have deflation, that it was a horrible thing. And by deflation, by the way, they mean a negative CPI, because in my book, deflation is when the currency and credit supply goes down. That's deflation. But be as it may, yeah, so this Keynesian policy of printing money, huge fiscal policy, deficit spending. That's backfiring. They thought that by having like high CPI, they would kickstart the economy, that people would get jobs. But they're finding out that no, people are not getting jobs, and people are hard up. They can't afford the cost of living in Japan is rising as well. So yeah, what do you think about that, Clive?
I mean, obviously, I know that Japanese real estate, especially in the big towns where there are jobs, there is like the highest price per square meter in the world, I think. Now, I think there's another point to make here. As these interest rates or yields on the bonds are rising, we mustn't forget the impact that this will have on the US Treasury market, because the biggest foreign investor in US Treasuries is, in fact, Japanese investors. So whether you're talking about the central bank, or whether we're talking about pension funds, or whether we're talking about the Japanese housewife investing her husband's money, at the end of the day, they've been through many decades of effectively zero interest rate on bonds. So what did the typical Japanese housewife do? She thought it was a great idea, and this would apply to pension funds as well. Great idea to go invest in US treasuries, where she could get a yield many, many multiples of the Japanese yield. And as we have seen over the last few years, a currency profit, because the US dollar was rising against the Japanese yen. Now, what one of the things now, the Japanese yen is still falling, or it depends how what your time scale is, but technically it's still falling if you look at a sort of a yearly move. One of the things which is changing is those Japanese interest rates now are 50, 25 times what they were a few years ago. And the housewife is now saying, I don't need to own US treasuries to make a bit of profit. So that money is going to drift back home, and the exposure of Japan, I think, to US treasuries will reduce, which is another reason why it's going to be a little bit more difficult for the USA to raise money when it's got a record deficit this year, all-time record deficit, and the interest expense has gone from around 8% of their tax receipts to around 18% of their tax receipts in 3 short years. So the USA is having to roll over all its debt, and it's rolling over its debt at a much higher interest rate than it was the maturing debt, which it took out over the last decade or 15 years when rates were low. And the natural buyers of US debt just aren't going to be there.
I agree. And I have on my channel here, Clive, because I've been covering Japan and what's called the Japanese yen carry trade, which has been going on for over 20 years, where foreigners borrow. So there you go, my playlist. You can go and check it out. I've got 39 videos. And let's see, I think I've got it. I've been doing it for, yeah, 9 years. I've been talking
Wow.
about this. So there are some old videos there, and the old wallpaper. But
Okay.
uh,
Tell me, Mario, when you started doing these videos, not on carry trade, but
yeah,
in general, were you doing it daily in the old days, or were you doing it
yeah,
weekly? And
I
you've always
always,
done it daily.
yeah, maybe not in the beginning, and maybe I did one every other day, but then pretty much started doing it very daily. Yeah.
That must be very hard work, because you've got to read books all the time and keep up to date with everything.
I like following what's going on in the markets and in the world, so I guess that helps. But yeah, I usually come up with something to talk about, which is good. But you were talking about the U.S., Clive, and yeah, it's not just the U.S., I guess, but also Europe. You know, the UK, the European government bonds. They've been also a beneficiary of, I think they call it Mrs. Watanabe's largesse, because she was only getting zero. Sometimes the 10-year yield in Japan was negative, but then if she came to the UK, she could get 2-3%. But now the long-term bonds in Japan are going up to 3 or even 4. So I saw this yesterday, Clive. President Trump, he went to see Jay Powell at the Federal Reserve, and I'll bring this up. This is quite funny, actually. He went there to talk about this renovation of the Federal Reserve, how the Fed's spending more money than they should. And my one of the things, though, Clive, the Fed's losing a lot more money buying U.S. Treasuries, isn't it? So just they've got like an over budget of a few $100 million, and so it just goes to show that I think this is all like a publicity stunt. But what was funny at the end was this here, and I'll
Ah,
play it.
Generally speaking, what would I do? I'd fire him.
He was president, you should call us to do that.
Well, I'm here just really with the chairman. He's showing us around, showing us the work. And so I don't want to get that. I don't want to be personal. I just would like to see it get finished. And in many ways, it's too bad it started, but it did start. And it's been under construction for a long time. It's going to be a real long time because it looks like it's got a long way to go. So,
Are there things the chairman can say to you today that would make you back off some of the earlier criticism?
well, I'd love him to lower interest rates. Other than that, what can I tell you?
I thought that was funny.
Just
It's like I'd love him to lower interest rates. Well, the reason
I'm laughing my head off.
yeah, the reason I'm playing that is not because well, it is funny, but also the thing is when Powell and the Fed lowered interest rates last year in September, they started, I think it was September 18th, they cut by 50 basis points, which was a surprise. And then they cut by 25 a couple more times, and they've stopped. They're at four and a quarter to 4.5. But the 10-year yield back when he cut rates the first time was 3.6, and we're now 4.4. And I've noticed also that mortgage rates have gone up since then. So I think what Trump thinks will happen, and maybe Besant also thinks it will happen, is if they cut the short-term Fed funds rate, that the 10-year yield, the 30-year yield, the longer rates are going to come down. And I'm not sure that's guaranteed. What do you think, Clive?
I think the bond yields will continue to rise even if they lower the short-term interest rates. By the way, we've got a Federal Reserve meeting coming up on the 30th of this
Yeah.
month. So we'll see if they reduce interest rates or not.
They're
I don't know
not
what
expected to,
not really expected.
but maybe after that meeting yesterday, maybe if he cuts rates by 1%, Trump will back off this investigation of
Yeah,
the refurbishment of the Mariner Eccles building.
you know what made me smile or laugh the most? You got Trump and Jerome Powell standing next to each other like they're buddies, and President Trump, he says, "I don't want to get. I'm not going to get personal here, but I'd fire him."
Yeah.
And then you see Jerome Powell with a great big smile over his face. And what's he thinking? Is he thinking, is this guy joking or what?
Yeah, I know. Um, Another thing I wanted to talk about, and you've probably seen this, Clive, because a few days ago I made a video about, or maybe even longer, I don't know, but about the mining stocks and the fact that uh, Newmont was looking really good technically. And yesterday we had Newmont results after the close. And actually, the Newmont stock picked up quite a bit. So here you go. Newmont cost cutting helps boost earnings as gold price rallies. So, yeah, I mean, it looks like the producers' all-in sustaining cost industry benchmark gauge for expenses decreased about 4% to $1,593 per ounce. So basically, gold could go down to 1,600 and they'd still make a little profit. So I think this is really encouraging. I have some Newmont. I think it's if you're going to be involved in the miners, it's a good one to have. So what do you think about this, Clive?
Well, I think it's obviously Newmont's in a special situation if they're reducing their costs. That's not really the norm for most gold mining companies, but I think that at the end of the day, all of these gold mining companies will produce much higher profits in 2025, the current year, than they produced in 2024, for the simple fact that even if the mining costs have gone up by, let's say, 10%, that's quite extreme, the gold price has moved up. At the average gold price of 2024 has moved up from the sort of 2000s area now to the average price of 2025 in the 3000s area. It's probably, I haven't got the figures because it depends on the average price over the year, but it's probably a 30 or 40% increase in the gold price, which means that the mining profits of all these mining companies, when they get to report 2025 results, will be much, much higher than they reported in 2024, meaning that they're going to look very attractive with lower price earnings ratios and high growth. And then, of course, you get all the algorithms kicking in to say, I want to buy companies with growth and at a low multiple, growth at a reasonable price, if you like. So I think that the mining sector, and if you buy the ETFs related to it or whether you buy the individual miners, I think you're going to do fairly well across the board, because if the gold price stays where it is in the 3000s, all of these companies are going to show bigger profits by the end of 2025.
Yeah, and yesterday after the market close, Newmont traded up to 64 $64, and I want to show you this chart, Clive, and the viewers, of course, because I spoke about this some days ago or last week. I don't remember exactly when that, and this was looking really good. This is an inverse head and shoulder bottom, so those are the shoulders here, this one and this
Hmm.
one, and that's the head. And I said, and this is a monthly chart, so it's long term. I don't trade these stocks like short term. I hold it long term. And I said, if we break this neckline, it looks really bullish. So now we'll have to see where it opens, but it's probably going to open around 63, 64. And if we close next week, if we close above this line, looks very constructive. And my target is in the 90s actually for this. It's not going to happen overnight, of course. So, and they also announced, I think, a 25-cent dividend. I don't know how, if that's the same as they've been paying, but yeah, you would also earn a dividend. So you're actually earning from gold, which is a nice thing.
Yeah, I mean, obviously, the way to get a yield on gold is to buy a gold mining company, or you could buy one of these gold royalty companies. I find the royalty companies general slightly expensive at the moment, so I probably wouldn't rush to buy those. But if you want a yield, you buy the company and you'll get an annual dividend, provided you buy one which is paying dividends. And I'm
Yeah.
just
Franco
so just
Nevada is one of them, isn't it?
that's right. There's another one. I think it's called Gold Royalty Corp. I'm not
Yeah.
recommending. I haven't looked into it, but there's several of those. Just to tell you on Newmont and the dividends. The dividends have, well, it's been up and down. It's been higher and lower. At
Yeah.
one point they were paying 14 cents a quarter. Then they were paying 55 cents a quarter. Then they're 25 cents a quarter. What did you say the latest dividend they just announced
I
was?
think it was 25 cents. So
Yeah, so that's a continuation of what they've
yeah.
paid for the last six to eight quarters.
And I think they're doing a buyback of the stock as well, or they have done. They announced that too. So
Excellent.
yeah, Clive, we want to change subject a bit. I saw this article written on LinkedIn. I don't know. I don't think I followed the guy, but it popped up, and I thought it was really interesting. He's explaining how, like, he says, when markets cheered the largest tax hike in over 50 years. So he's basically arguing that the Trump tariffs are are like the biggest taxes since World War II. And the reason for that is this here. It says another way to evaluate the magnitude is by revenue. According to projections from Trump administration itself, the tariffs will raise 600 billion annually from automotive goods and 100 billion from more from automotive tariffs. Combined 700 billion a year, or 6 to 7 trillion over the decade. But he explains here that he says, contrary to the celebratory mood among short-sighted narrative traders, import tariffs are not free money. They are, in essence, taxes levied on foreign goods, paid not by exporters, but by U.S. households and businesses. Higher tariffs raise input costs, compress corporate margins, reduce disposable income, and eventually stifle both consumption and investment, two pillars of economic growth. What's being portrayed as a nationalist renaissance in reality is the biggest tax increase since World War II. And in the 30s, they had the Smoot-Hawley Tariff Act, and that made the Great Depression even worse. So, do you agree with this guy, or do you think there's something that this Trump policy is doing that we're not seeing the positive from it?
I think, well, to tell the truth, yesterday I listened live to the Tesla earnings call. And one of the reasons I like to listen to the earnings call is you often get information which is not actually written in the quarterly report. And they were asked some awkward questions by the analysts. And one of the things which came out, and this is just an impression I picked up, is that the tariffs are going to hurt Tesla for a number of quarters, at least in some respect, it's going to hurt Tesla. Now, obviously, that came with them also giving out some positive vibes. One of the things they said is, if everything goes right for us, eventually we want to be one of the largest, not one of the, we want to be the largest company in the world. So they were, balancing the positives with the negatives. But they said, you've got something along the lines of, you've got to expect some impact from these tariffs, which is costing us more. And of course, they've also lost their, I think it's $7,500 per car gift from the government for buying electric cars. So just looking at that, I think that across the board, industry is going to suffer from these tariffs, industry in the United States. Now, whether the 600 billion that Trump believes he's going to get from getting the tariffs as the goods come to the United States will be compensated, will compensate for the falling tax revenues in other areas. I don't know, but I don't think it's going to bring in what he hopes for. But we'll see.
Yeah.
I think I've seen some figures which were much lower, so he's maybe a bit optimistic there.
But the 700 billion, actually, that guy said, is actually not coming from China or other countries.
No, it's Americans who
It's
pay
being
it.
paid by the importers, and then the importers charge the wholesalers. The wholesalers charge the retailers charge the consumer. And I understand that he's trying to bring back or onshore industry back in the US. But this is going to take more than like a year or two because to onshore, let's say, I read that if they wanted to make iPhones in the US, right now it would cost $3,000 to buy an iPhone from the US because there's so many different supply chains to build an iPhone, and it would take years for that to evolve in the US. But the other thing, Clive, even companies that are manufacturing in the US and producing stuff, a lot of times they'll buy the inputs for production from other countries. And if you increase the price of these inputs via tariffs, that's going to also hurt. So yeah, I thought that was an interesting article, and maybe he's got a point about the euphoria of this of the markets. And have you looked at the? I guess you do follow that Buffett indicator, which is the market cap of all U.S. stocks to GDP. That's at an all-time high, isn't it?
Yeah, well, a lot of things are very close to their all-time highs. Effectively, I think we're just in a global market melt-up, as we have
Yeah,
been probably
melt
for the
up.
last
Yeah,
5 years.
yeah,
Um, it's not accelerated. Well, it's at the moment it's a steady rise, but that's how melt-ups start. They start with a rise where people, one week they say I'll buy a house, next week they'll say I'll buy some gold, next week they say they'll buy a machine before, and they're looking to buy things before the prices go up. And at the same time, the government's pumping money into the system at a faster rate than all of history. I'm talking about the budget deficit here, which means the government has to borrow more money and spend it. So that money, when it ends up into the hands of the people who accumulate it, they have to buy something. And that's what's pushing the stock market to all-time records. In my opinion, we've got a stock market which has lost touch with valuation now. It's driven by the monetary mass which is coming into it.
Yeah, I mean, I spoke about that yesterday because here in the UK, the FTSE is making all-time highs above 9,000. But if you look at the economy, it's not doing great at all. We've got loads of problems here. And I argue that if you look at the FTSE in terms of gold, it's actually been going down just like the Dow and all the other stock markets have been doing. So yeah, I think it's a melt up. Whether it keeps going is another question. I think if it crashes, though, I think the Fed will step in aggressively and other central banks, and the melt up will continue. And they'll keep doing it until, I don't know until when, Clive, but it certainly smells of hyperinflation to me. And all the symptoms, not just economic, but political, social, and geopolitical, are there for that.
Yeah. Did you see that Britain might be about to have another Gordon Brown moment? Rachel Reeves is thinking about selling Britain's stash of Bitcoin. This is the Bitcoin they've confiscated from criminals.
Uh,
And rather than keep it as part of their reserves, she's thinking of selling it. And then, of course, I wonder how we're going to look at that 20 years from
yeah,
now. Will we be making fun of her, or will we say that was a brilliant move?
yeah. Apparently, it's worth about £5 billion. But I saw the other day, Clive, they came out with statistics for the budget deficit, and it was 3.5 billion more than expected. So yeah, it's a drop in the ocean, the 5 billion Bitcoin, but I know what you mean. If she sells that and then it goes through the roof. But talking about Bitcoin, Clive, I saw this article this morning in the FT, and I'm going to share it with you and the viewers. You probably heard of this. Companies looking beyond Bitcoin to drive up their share prices. Listed firms load up on Ethereum or Ether, Litecoin, and Trump coin as they bid to emulate Michael Saylor's strategy. I mean, I think this is really dangerous for normal companies to buy Bitcoin and these altcoins just because it's been successful for Michael Saylor, and they're using leverage, or i.e., they're issuing equity or bonds to do this. I think it's mad. I don't know what you think, but it also shows, Clive, that no one's looking at gold or silver. There's no time.
Yeah.
You don't see them buying mining companies.
Well, I think it's all a question of quantum. If you decide to put 1% of your assets into Bitcoin, that's an asset diversification. If you decide to put 20% in, you're stark raving mad because you're basically taking a bet which doesn't make any sense. So I think when a company has a treasury, they're keeping it all in cash. They may not need to spend it today, so they want to make it work for them. And leaving it in cash for the long term just isn't a good deal because it's going to be depreciated by the ongoing printing of the
Yeah.
governments. So they need to diversify, but that it's very funny that they're not buying gold. So what are they buying? They're going into two things. They're going into the buzzwords of today, the very same buzzwords with different buzzwords, but the same style as we had in 1999. Which when then it was 99, it was .com, .sys, .net. Now the buzzwords are .ai and Bitcoin,
Yeah.
and I can't
Crypto.
blame,
Crypto,
I
yeah.
yeah, I can't blame companies for wanting to boost their share price by using a buzzword in their latest report. So if you can do a quarterly report and say, oh, by the way, everybody, we bought Bitcoin, it's going to push up your share price. If you say, oh, by the way, everybody, we're now using AI, it's going to push up your share price. So this is the mantra of the world. And unfortunately, companies, they want to get the share price higher because all these executives have got their stock bonuses and options and things like that. And the time to make the announcement about Bitcoin or AI is the day before you're going to cash in.
Yeah, and I think the other thing it points to is the fact that interest rates on fiat currencies are too low, because if they were high enough to protect the reserves of these companies, the treasury of these companies, they would probably be investing more in deposits, like in dollars or pounds or euros. Um, and I don't know, it just doesn't feel right to me. Let's say a company that's involved in, I don't know what, you'd think they'd be investing in their business, not trying to speculate. But like you said, if they do 1%, it shouldn't be a problem. But anyway, so yeah, I think next week, Clive, we've got this Fed meeting. It's a 2-day meeting, of course, Tuesday and Wednesday. I was reading an article, and they're saying that they're not expected to do anything or cut rates, but you never know. That last comment by Trump was quite interesting. They said, what can he do to like calm you down, so to speak? And he said, "Well, he could cut rates," and he like. I thought that was funny, and even Powell smiled.
I found that the most embarrassing grin I've ever seen.
Yeah, and I'm not a fan of central banks, but I saw that this guy from PIMCO, which is the biggest bond fund, he said this could be disruptive for the markets if Trump keeps pushing against the Fed's independence. Not that I think the Fed has done a good job or since its inception.
Yeah. I wonder if he'd been standing next to Elon Musk and insulted Elon Musk in the way he insulted Powell there. I wonder what Elon Musk would have done. Would he have had a big grin, or would he have turned to something a little bit more dramatic?
Yeah, I don't know. Elon Musk is gone now from, you don't hear from
Yeah,
him
he's not
much
friends
anymore.
anymore.
Yeah.
Well, obviously, he's Musk has had his punishment by having his vehicle subsidies taken away.
Yeah. Oh, the other thing I saw yesterday, and this could be interesting, is that France wants to recognize Macron, Palestine as a state.
Yeah.
So uh, the Americans and the Israelis are not happy about that. So maybe something could happen in France. I don't know if there's a crisis brewing there, but just wanted to put that out there. Clive, as we wrap up, anything in particular aside from Japan that you think could be a risk for overall markets?
Well, I think the big risk we've got is the ongoing printing of money, which, and I've just done a video last night. In fact, it went up in early hours of this morning about the greatest fraud in all of history, where one man managed to secretly reprint the entire currency of Portugal. This is in 1924, doubling the money supply. And what happened was the prices of everything went up. The currency went down. Gold was going up. Properties were going up. Businesses, that was a moribund economy. And suddenly it became a booming economy because he secretly introduced to the economy effectively almost double the entire money supply. And nobody knew it was happening until someone found two banknotes with the same serial number. So have a look at my video. But that crime of doubling the money supply is one we're in the middle of as we speak today. Except now, unlike that particular period, increasing the money supply, inflating the money supply, is completely legal.
Yeah, I mean, there he is. You told me about this a few years ago. And as a Portuguese speaker, having grown up in Brazil, I actually found the series from Portuguese television, and I watched it online. It's a really interesting story. So it says Artur Alves Reis was a Portuguese criminal who perpetrated one of the largest frauds in history against the Bank of Portugal. So the story is, Clive, I think he got the banknote printer in London or in the UK to
Waterloo and Sons.
yeah, he got them to print notes for him. And he pretended he was part of the Bank of Portugal, which is quite amazing. So he was actually not counterfeiting anything because it was the official printer for the Bank of Portugal. But yeah, like you said, nowadays when central banks do it and there's no backing to the currency, it's not considered fraud. It's considered monetary policy. And I think Japan is the Portugal, I think now. Of course, they considered what he did a fraud. I consider what Japan and the rest of the world have been doing a fraud.
Well,
Money
it,
printing, no backing.
perhaps the most interesting thing about this story is what happened when the fraud was discovered, because now everybody had banknotes in their hands and they didn't know which one was real and they
Yeah,
didn't know which one was the unauthorized banknote. So you know what everybody immediately did? They rushed down to the shops to buy anything they could,
yeah.
and the shops said, "We're not taking your banknotes because we don't know which one's the real one."
And you can see here that back then it was backed by gold, supposedly. Ouro, that's gold in Portuguese.
Okay.
Yeah, so
I think the other sort of side part of this story was the Bank of Portugal had illegally against it was authorized to issue a certain percentage of its reserves in currency, but they'd had all these side issues without telling anybody because the government kept running out of cash. And so they had secretly been printing money anyway. Of course, Artur dos Reis, the fraudster, just accelerated the situation by printing as much again for himself.
so these are the public queuing outside the Bank of Portugal trying to get real notes. I'm not sure they got any because
They were trying to get metallic money, gold or silver.
yeah, I don't think there wasn't enough there because it's strange because Portugal now is one of the countries that has a lot of golds. Uh,
That's right. It's one of the biggest gold holders.
by foreign reserves.
So you got to wonder if this
Yeah, right here in
event,
Portugal,
yeah, it
the
makes you wonder if this,
84% of Forex reserves is gold. There you go.
yeah. And so you know the what actually happened when after this was discovered, the army who'd been on a sort of fixed pay was seeing the prices rise, and that it was becoming harder and harder for the people of the army to survive on their fixed pay with rapidly rising prices of goods and food. And within a month of the fraud being discovered, they started to hatch a plot to overthrow the government. And then a few months later, the government was in fact overthrown, and we had a dictatorship which lasted, I think, 36 years.
Yeah, Salazar. Yeah, he
That's
was.
it. Yeah,
Yeah,
yeah.
but yeah, and you're seeing that happening. Not like exactly like Portugal, but you're seeing all these what they call populist movements. It's because of that, because the currency's been overissued, and now the prices are starting to go up because it's just the simple law of supply and demand, Clive. The more currency you issue, uh, and if you don't keep up with the production of goods and services, the currency is going to become worth less. And that's why it's so important to have commodity money because it's not as easy to create gold and silver. So I'm going to end with that, Clive. I'm going to wish you a great weekend, and hopefully we'll be talking on Sunday for the live stream. And to the viewers as well, I wish you all a great weekend.
Thanks, Mario. And if anyone wants to watch or listen to my video about that story, go to Clive Thompson on YouTube and you'll find the story.
Yeah, I saw there's a nice thumbnail, you and your son.
That's right. My little boy is listening to it. He's asking me all sorts of important questions like, why does the government pay for you to have a lawyer if you can't afford one, or why,
Okay.
what is finance?
Yeah. Okay. Great. Take care, Clive, and all of you.
Thank you very much, Mary. Bye bye, and bye bye to all your viewers.